So, Steve, you built Cote Gold into a really world-class mine. Curious, what do you see at Cassiar that makes you think they're similar, or that there's similarities there?
Well, let's just go back a little bit to, I guess I was the one who initiated it in terms of the purchase of Cote. I actually didn't build it, but
Sure.
brought it to the stage where it got built, and very similar. They're both roadside mines. And what I mean by that, the highway between Sudbury and Timmins, Highway 144, literally runs right alongside of Cote. So you exit off the highway, you're at the mine. At Cassiar, Highway 37 South, you exit off the road, you're in the Cassiar deposit. In fact, Highway 37 bisects the mine. So both have similar land sizes, about 59,000 hectares. By the way, that's like 140,000 acres. It's huge.
Sure.
And both had very well-developed infrastructure. Cote, which what I liked, we used to have a hunting cap out there, my family, when we were younger. So I knew the area. Cote had all of the roads built by the lumber company that was, cutting trees there. So easy to get around throughout the entire deposit. Cassiar, a group of investors around 2009 put upwards of $100 million.
Wow.
In developing about, I'm going to say 170 kilometers of roadways, core shack, camp, power access. So if you were going to try and replace that today and build that infrastructure at Cassiar, it would cost you $300 million. We're trading as if we're about a $50-60 million market cap company. I find that ridiculously cheap. So, and that's why I buy shares every year. That's why I participate in the financing. Very similar to Cote and IAMGOLD. I never sold a share at IAMGOLD. I took all my bonuses in shares at IAMGOLD. At Cassiar, I don't get paid cash. I take everything in shares, and that's why I'm the largest independent shareholder of Cassiar.
That's real skin in the game.
Yeah, well, you've got to.
Sure.
I mean, to me, you've got to walk the talk and show people that you believe in it, and I do. I was a prophet, if you will, for Cote. The people at IAMGOLD deserve all the credit for building that mine. I'm not taking credit for that. I will take credit for the fact that I was able to see it. I was able to develop it. I was able to bring financing in. And both of these mines, think about this, okay?
Sure.
Cassiar has about 2 million ounces right now of gold. Inferred, measured, indicated about 500,000. Run that mine at 150,000 ounces a year for 15 years. At today's gold prices, you're going to generate about $300 million a year in free cash flow. You'll pay off the Cassiar mine in 3 years. And you'll be generating cash flow for the next 12 years. Our stock right now is trading at 45 cents Canadian. It will be cash flowing around $2 Canadian a share. I find that an enormous value right now. And I think if once shareholders understand this, and the same thing happened at Cote and IAMGOLD, it sat and it sat and it sat. And we were trading at around $2 a share. This morning we're at IAMGOLD, $24, $26 a share. So went from about $1 billion company to 15 billion. So I see the same thing for Cassiar. I see Cassiar going from a 45 cent a share company to at least $2 to $2.50 Canadian a share.
Wow.
And I'm going to hang on to my shares till I see it, because I know people are going to want to develop that mine. Good First Nation relationships, great technical team. Jill Maxwell and her team are excellent. Great infrastructure, great access. And we're in a very friendly mining jurisdiction. We're not in Africa, where I worked with IAMGOLD. where I don't have 8 bodyguards, right? I drive off the highway, grab a coffee, and you're in the deposit. Very similar to Côté.
Sure.
In fact, identical.
Yeah, and I want to talk about infrastructure actually for a second, because I know Cassiar has permitted mill, camp, the highway going through, et cetera. How important do you reckon all that infrastructure is to Cassiar's future in de-risking?
Well, you take a look at how much it costs today to build something like that.
Sure.
And the fact that we have all of that in place today. As I said, we're not raising money to build roads. We're not raising money to build core shacks. We're not raising money to build a camp. We're not raising money to get permits. It's all there. We're raising money to drill, which we've had great success. And we're going to raise money, I would suspect, in some way, shape, or form, to refurbish that mill and start producing cash flow. It's a 200-ton-a-day mill. And it doesn't take a rocket scientist to figure out that 100,000 ounces of gold is going to produce about 400 million in cash flow for us. And that mill can, with call it $10 million of expenditure, all of a sudden start generating some great cash flow. We have tailings we can access, and we have in Cassiar South, we have the narrow veins, high grade gold, which is where 400,000 to 500,000 ounces of gold was previously mined. I mean, this is, to me, a gift. It's a gift for people to take advantage of. And that infrastructure, to me, it's the same reason I went in and bought Côté. Absolutely same reasoning. When you have that access, when you have that infrastructure in place, it is a huge benefit for shareholders.
Oh, awesome. I know, speaking about drilling and the resource itself, I know you've got bulk tonnage, but you've also got those high-grade sections. Right. What excites you most as you get in towards development about the current process?
It's like going to a restaurant and looking at a menu, and you have some great entrees. We have Cassiar North, which is the bulk tonnage, and very little overburden, easy access, easy to mine. And then on Cassiar South, I would say higher risk because it's the narrow vein mines that are available. High grade, so economics are a lot more attractive.
Sure.
But you've got both.
Yeah, right.
So, you can do both as well. So mill probably would be more receptive to the high grade to start because you're going to get greater returns. But the bulk tonnage is going to be very attractive to mid-tier companies as well because, again, 100,000, 150,000 ounces a year at today's prices, huge cash flow returns.
And the majors and mid-tiers are, they're looking for new inventory, so it makes sense.
You tell me the last mine that's been built. I mean, there've been one or two maybe, but a lot of people are not going back into Africa.
Sure.
In fact, they're selling out of Africa. So you find a mine like this in a friendly jurisdiction like British Columbia, I think it's pretty attractive.
Makes sense. I got one last one for you. You mentioned the valuation gap for right now. What do you think are the catalysts that's going to get you closer to what you feel is that fair valuation?
Well, if you believe in net present value, which I mean, that's a religion to me, and you've heard people like Rick Rule talk about this, you've got to be able to show shareholders a path to net present value. And in order to do that, you've got to show them a path to cash flow. So I think if we can demonstrate to our shareholders or future shareholders, there is a distinct path to producing cash flow, which we are going to do, the stock's going to move up quite rapidly.
Awesome. Well, looking forward to following the story.
Thank you very much.